There's a question that I repeatedly ask myself each day, each week, each month, each year. And it's a question that when I go looking for the answer, it helps me with my investing, it helps me with my relationships, helps me with my marriage, helps me with being a good dad to my kids, helps me helping you get what you want. And it's a question that I've never heard anyone else ever ask, which is kind of interesting, though maybe not. And I want to share that one question with you because it's made a big difference in my life and it's made a big difference in how I manage money and how I teach people. So I want to share that with you. I'm actually talking to you from Lake Arrowhead down in the San Bernardino Mountains, which is about 2 hours east of LA, down here with my family for the UCLA Family Camp, which we just love. It's our second year here, and it's just great being here with I think about 90 other families and all their kids. It's a great time. So hey everybody, this is RC Peck. This is my market situation report for the week, and there's something I want to share with you. And before I get to that, there's this thought that has been kind of bouncing around in my mind for years, but it really has been brought to the forefront this past week. And I'll say it this way: there are no points awarded for difficulty in investing. Humans love complexity. They strive for complexity. Humans believe that if things are more complex, then they're stronger and more powerful. And when it comes to investing, it's the exact opposite. And I wanted to go find someone who knows something about investing more than maybe anyone else on this planet. Though he has passed away, he is responsible really for what we have as modern day investing. And the person I'm talking about is Benjamin Graham. And there's a great interview of him in 1976. And there's this one particular question that really jumped out at me. And the question is, in selecting the common stock portfolio, this was a question to Benjamin Graham, do you advise careful study of and selectively among different issues? And here's his answer: no. I'm no longer an advocate of elaborate techniques of security analysis in order to find superior value opportunities. This was a rewarding activity 40 years ago when our textbook, Graham and Dodd, was first published. But the situation has changed a great deal since then. In the light of the enormous amount of research now being carried on, now remember this is 1976, I doubt whether in most cases such extensive efforts will generate sufficiently superior selections to justify their costs. So here's a guy who was the mentor of Warren Buffett, who is one of the best investors on this planet, and Warren Buffett learned from Benjamin Graham. And Benjamin Graham is saying near the end of his life that the complex approach, the complicated approach, is no longer needed. In fact, it no longer works. And yet we as humans want to make things so complex. And I get questions all the time, RC, why don't you do this, and why don't you add that, and why don't you do this? And all the questions are almost always about adding something. Like, why don't you add this to your portfolio? Why don't you add this to your strategy? Why don't you add these 3 more steps? And I'm not saying I don't do it. I do want to add complexity. And that's why the question I ask myself often is, how are you making things more complicated? Or because I would say it to myself, how am I complicating things? How am I complicating my investing? And so I just want to show you 3 simple pictures for this week's market situation report. And all 3 are up to date. And this is the S&P 500. This is stocks. This is, you can invest in companies. These are publicly traded companies. And keeping things simple, I just want to kind of point out to you, look at this picture here and just kind of say, which direction is this going? Is it going up or down or sideways? Well, to my brain, it's going up. The price is going up. Now you see that horizontal line? That's the old lifetime high of the S&P 500. And the reason I'm using the S&P 500 is because it's the most followed stock index in the world, and it probably has the most influence over any other stock index in the world. And so, again, it's really simple. It's going up, whether you want it to go up, whether you think it should go up, whether it's only going up because of Ben Bernanke and his money printing, which may be true. The fact is, it is going up. And let's keep the complication out of it. The fact that this price moved up above its lifetime highs, sat on it, meaning it used to be a resistance, now it's a support, and then moved up from there. That's not complicated, but it's powerful and it's clean. And so sticking with the let's not make things complicated, we know that stocks in the US, generally speaking, are going up. We can take away all the news. We can take away all the information that we find on CNBC and MSNBC and whatnot, and just simply look at a nice price chart. The second image I want to show you is the 10-year Treasury bond price chart. And this is my example for debt or bonds. And we've talked about this before, where if the 10-year stays above 2.4%, which is about what that horizontal line is on the screen, if the 10-year Treasury yield stays above 2.4%, that means the super low yields, the super low rates of the past are behind us, which we, in hindsight, clearly hit the bottom in July of 2012 at a crazy almost, what is that, about 1.4% for a 10-year? Today we're at about 2.6%. And in fact, since May 1st, we're up about 60% on that yield. Meaning May 1st of this year, the 10-year Treasury yield was about 1.6%, and today it's about 2.6%. That's a pretty incredible increase. But what's most impressive and not complicated is if it stays above this 2.4%, that is an indicator that the world is saying, hey, you know what? Those super low rates are gone, and now we're just left with low rates. Again, this is not complicated. The third screen is I want to just show a currency. And the reason I have the US dollar up as a currency is because it's the most used and followed currency on this planet. And now notice this is a price chart going back to 2004. But notice here, if anything, the US dollar has been stable. I mean, people rushed into it in 2008 when the world was ending, and then they rushed out of it, and then they rushed back into it, and then they rushed out of it, and then they're in, then they're out, then they're in, then they're out. But for the most part, it's been pretty stable or getting more stable. So when people say that the dollar is going to go, and become worthless, or the dollar is going to spike up and become more valuable, really what the charts are saying, what a non-complex view is saying is, no, the US dollar is stable. Now you can read into that and say that stability is actually a weakness, considering that the Japanese yen is printing so much and they're a huge currency of the world. And the European Union is in real trouble, and people haven't flooded into the dollar. You could say that's why, the dollar is actually weak, because you'd expect it to go up. But that's kind of just putting opinion to something as simple as, yeah, right now the dollar is stable. So the thing I really want you to take away from this week's market situation report, and I also want you to know, is we never talk about just one thing. Sometimes we talk about currencies, sometimes we talk about commodities, sometimes we talk about gold, sometimes we talk about the stock market. I am agnostic to where your money can grow. I just want to find the highest probable place for it to grow. But the thing I really want you to take away from this week is this question: where are you complicating your investing? Just one question. Where do you complicate your investing? Because you are complicating your investing, just like I am. And I've been a student of investing for 20 years, and I ask this question to myself each day. And the more I eliminate complication from my life, first of all, the more time I have, the more energy I have, and the better my money grows, and the better performances over longer periods of time. So ask yourself that, write that question down, and answer it each day and take something from it. I'm so glad you guys are here. I'm going to be back in the Bay Area, back in Silicon Valley in a couple days as the UCLA family camp is winding down. I hope you guys are having a great weekend, enjoying the summer. And I have a great webinar coming up this Wednesday where I'm going to talk about how to decomplicate investing and how that's really made a difference for me and my money management clients, and really people following me over the last 5 to 10 years. You guys take care, and I'll speak to you soon. Bye.